Welcome to the Deep Dive. This is the show where we take the sources you give us, we peel back the layers, and really try to unearth the most important bits of knowledge.
That's right.
Today, we're diving deep into visual effects. It's the industry that, well, it literally brings blockbusters to life.
Absolutely. Movie magic.
Exactly. And our focus is Phantom Digital Effects Limited. We're looking at their detailed H2 FY25 financial performance and some strategic updates from their latest earnings call.
Yeah, a lot to unpack there.
You've given us the material, and our mission today really is to uncover how PhantomFX managed a pretty challenging year. We'll look at their bold global expansion plans and what their future outlook means for, visual storytelling.
It's a dynamic space, for sure.
Get ready for some, hopefully, surprising facts and insights. We want to give you that real shortcut to being well-informed.
Let's do it.
Okay, so to kick things off, Phantom Digital Effects Limited, they're clearly doing more than just, cool creative stuff. They seem to be building a truly global presence in VFX. Can you maybe paint a picture for us? What exactly does PhantomFX do, and what's their kind of overarching vision?
Well, I think a key aspect of PhantomFX's identity is just how comprehensive their approach is. They started back in 2011.
Okay.
And they've really become a leading provider of VFX for commercials, feature films, web series, the whole gamut.
Right.
And they put a real emphasis on secure, cutting-edge solutions. They've got this TPN certificate.
Ah, the TPN certificate. What is that for people who might not know?
It's basically an industry-standard security audit. It comes from the Trusted Partner Network.
Oh.
Super important when you're handling sensitive IP from the big studios.
Gotcha. Security's key.
Absolutely. And their main operations are strategically located across India, Chennai, Mumbai, Hyderabad, Bangalore.
Okay.
But they also have an office out in San Francisco and global marketing teams in the U.S., Canada, Dubai, the U.K.
Wow, quite the footprint.
Yeah, and it's all supported by over 600 skilled professionals. Their grand vision, though, it goes beyond just like individual VFX shots. They're aiming to become a really comprehensive media group offering a whole range of services.
Interesting. So more than just VFX.
Definitely.
And when you mention major clients, who are some of the big names we might recognize?
Well, they consistently work with the real giants,
Yep.
Like Disney, Netflix.
Okay, the really big ones.
Exactly. They're the ones blending the computer-generated stuff seamlessly with live action, creating those amazing visuals you see. It really shows they're at the forefront.
Right. Okay, now let's turn to the numbers. Fiscal year 2025. This was, it was a challenging time for the whole entertainment industry, wasn't it? With the strikes,
Yep.
production halts.
Absolutely. FY25 was marked by some pretty significant industry challenges. Yeah, the temporary disruptions from the actor strikes, the ripple effects from the writer strikes, which led to widespread production halts. It was tough.
So amidst all those headwinds, how did PhantomFX actually perform?
Well, this is where it gets interesting. Despite that whole turbulent environment, PhantomFX actually showed remarkable resilience. Their total income surged.
Really?
Surged.
Yeah.
By 14.36% year on year. It reached 102.16 crores.
Okay, so for context, 102 crores is roughly, what, 12 million US dollars?
Yeah, around that mark. And if you include other income, it actually touched 104.37 crores. That's a pretty significant jump from the 0.43 crores in FY24.
Okay, that is impressive growth given the backdrop. But I noticed their net profit actually dipped. That feels a bit counterintuitive. Revenues up, profits down. What happened there? What squeezed the margin?
That's a sharp observation. And you're right. Their EBITDA, earnings before interest, taxes, depreciation, and amortization, that did increase slightly by 2% year on year to 39.69 crores.
Okay.
Which meant they maintained a healthy EBITDA margin around 38%.
Still pretty good.
Yeah. However, their net profit, that came in at 20.20 crores. So the net profit margin was about 19.36%. And earnings per share stood at 14.88. Now compare that to FY24. Net profit was higher then at 24.11 crores, and EPS was 26.90. So management, they primarily attributed this dip to those industry-wide disruptions we talked about and the necessary operational adjustments they had to make.
Makes sense.
But I think the fact they grew revenue at all during such a tough period when many others really struggled, it does suggest some underlying resilience. Maybe a diversified client base helped insulate them.
Possibly.
It points to some strong operational strategies, definitely, to navigate those hurdles, even if profitability took a temporary hit.
Okay, so they navigated these financial headwinds, But PhantomFX didn't just sort of hunker down, did they? They actually went on the offensive, made some pretty bold strategic moves in FY25 to really strengthen their global footprint.
Absolutely not, just hunkering down.
So can you walk us through how they're kind of building their future?
Yeah, absolutely. I mean, a key question for any company that wants to grow is how do you rapidly expand your capabilities, your reach?
Yeah.
PhantomFX really tackled this head on. First off, they strategically set up a wholly owned subsidiary over in China, Hangzhou Huantong Digital Technology Co., Ltd.
Okay, China. Big market.
Huge market. This move targets that rapidly expanding, like $4 billion APAC VFX market. It really reinforces their position as a, key global player.
And what are the expectations for that China hub?
Management's pretty optimistic. They're expecting it to generate somewhere between, say, $5 to $8 million in revenue just for FY26.
Wow, right out of the gate.
Yeah, and potentially 20 to 30 million in the medium term. They specifically mentioned the Chinese government being really supportive, offering free space, even housing.
Free space, nice perk.
Right, and they think it'll be profitable from day one. Basically, a lean local team combined with their efficient Indian execution model.
Interesting strategies. What about domestically here in India?
Well, in parallel, they successfully established Spectre Post Private Limited down in Bangalore.
Ah, Bangalore.
Yeah.
The tech hub.
Exactly. Leveraging that thriving film industry, the talent pool there.
Yeah.
And crucially, this allowed them to introduce digital intermediate services, DI.
DI, so that's like the color grading, the finishing touches.
Precisely. Color grading, final mastering of the film. It's a really valuable new offering. And Spectre Post has already contributed to some notable domestic blockbusters.
Good start for them then.
Definitely.
But the biggest headline, I think, has to be the acquisition of Tippett Studio.
Oh, yeah.
For listeners who might not be familiar, what's the significance of Tippett in the VFX world?
Tippett Studio it's a true legend, a beacon of creativity. They've left an incredible mark on film history. Think pioneering work in iconic movies you've definitely seen, Jurassic Park, Star Wars.
Oh, okay, yeah. Those are huge.
Absolutely. So this acquisition, it marks a monumental step forward for PhantomFX.
How did the acquisition actually happen?
It was acquired through Chapter 11 restructuring proceedings in the U.S. The final court approval came through on March 26, 2025.
Chapter 11. So
Yeah.
Some people might hear bankruptcy.
Right. But it's important to understand, as management clarified, Chapter 11 is a reorganization process. It's not a straightforward bankruptcy filing in the liquidation sense.
Okay.
And they stressed it doesn't impact Tippett's reputation.
Yeah.
They pointed to recent wins, like Marvel's Ironheart series, a Star Wars show,
Yeah.
as proof of its ongoing vitality.
Okay, that makes sense. But acquiring an iconic studio like Tippett, they got an 80% stake for only $3 million. That seems incredibly low.
It does, doesn't it?
What's the real story behind that valuation? Was it just Tippett's downtime, or is there more to it?
It's definitely a striking figure. So Tippett Studio generated $7 million in revenue last year.
Okay.
Though, importantly, that wasn't consolidated into PhantomFX's FY25 books because the court approval was late and they're still waiting on FEMA and RBI clearances.
Right, the regulatory hurdles in India.
Exactly. Those foreign exchange and central bank approvals, they expect that in H1 FY26.
And the projections for Tippett going forward.
They're projecting it'll deliver maybe $12 to $15 million in FY26. So that $3 million price tag for 80%.
Right.
Management explained it happened during Tippett's, quote, downtime.
Right.
The founders, who were older, were apparently looking for new management, a path forward. So PhantomFX kind of framed it as a strategic buy, getting established IP, client relationships, but during a period of distress.
A calculated risk, maybe.
Perhaps. They emphasized, though, that Tippett's future growth really hinges on PhantomFX providing resource support. They actually said Tippett cannot do without Phantom support, citing their execution power, their manpower.
So PhantomFX needs to actively nurture it. It's not just plug and play.
Exactly. It implies a significant integration and growth effort is needed from PhantomFX's side.
And it sounds like they're also seriously beefing up their talent pool in the U.S. to support this?
Precisely. They've significantly strengthened their U.S. office, brought in several distinguished professionals.
Like who?
Well, there's Ian Unterreiner as Executive Vice President, Christina Weiss as VP of Business Development and Sales, Hayden White as an Executive Producer,
Okay.
and Mark Reyes, who's a skilled VFX supervisor known for his work in AI and compositing. Plus, they hired a Global Director of Marketing and Communications.
Wow, that's a serious team.
Yeah, these additions clearly enhance their leadership, their creative teams, preparing them for that bigger global footprint.
Okay, let's shift gears a bit. Let's talk operations. Management mentioned a very strong order book and pipeline. What does that actually look like for the coming year?
Well, as of the earnings call, PhantomFX had a confirmed order book of 72 crores.
72 crores confirmed. How does
Yeah.
that split internationally versus domestically?
It's pretty balanced, actually. About 38 crores domestic, 34 crores international. And that's all expected to be realized, invoiced, and completed in FY26.
Okay. And beyond the confirmed orders,
Yeah.
the pipeline?
Beyond that, they have a pretty robust pipeline of potential projects, valued somewhere between 270 crores and 312 crores.
That's a big range.
It is. And interestingly, about 60% of that potential is coming from international opportunities. So, yeah, it suggests a very busy year ahead for them.
No kidding. And they've been incredibly busy on screen too, right? What are some of the notable projects that PhantomFX and our Tippett have recently worked on?
Yeah, in FY25, they played a really pivotal role in tons of productions, both international and domestic, delivered thousands of VFX shots.
Any titles we'd recognize?
On the international side, titles like Tension 2, Creation of the Gods, and that Marvel Ironheart series we mentioned, which had Tippett involved.
Okay.
In India, they contributed to some massive blockbusters, Pushpa 2, IC 814, Kalki, Vandale, Tavara.
Wow, big names in Indian cinema.
Huge. And Spectre Post, their new DI studio, they worked on films like Amaran, Good, Bad, Ugly, Sikandar, Game Changer.
So across the board, really.
Yeah. And they highlighted their mix of in-house tools and software, plus their team's efficiency, as being essential for delivering these ambitious projects, often on really tight timelines.
It's easy to get lost in just the sheer volume of creative work they're churning out. But let's talk cash flow for a second.
Yeah.
It sounds like investors had some, let's say, tough questions about receivables and funding. What's the real story behind those numbers? And why are receivables often such a, point of focus in this industry?
Right. Receivables are absolutely crucial because they directly hit a company's liquidity, its cash position, especially in project-based industries like VFX, where you often bill based on milestones, not just, monthly.
So payment cycles can be long.
Exactly. So PhantomFX, they had outstanding receivables of about 60 crores at the end of H1 FY25.
Okay.
From that, they collected about 58%, which is roughly 39 crores, leaving 32 crores outstanding from that period.
All right. And H2?
For H2 FY25, they had 26 crores in receivables, and they collected 22 crores of that, leaving only 4 crores from H2.
So collection improved in the second half.
It seems like it. As of the call, the total outstanding receivables, combining FY24 and 25, stood at 36 crores. They expect to collect most of that in Q2, maybe some spillover into Q3.
Okay. Now, there was a particularly striking detail in the Q&A about unbilled receivables. What exactly does that mean? Why is that different from regular receivables?
Yeah, that's a good question. So the total receivables figure on their books was 85 crores.
Okay.
A big chunk of that, 43 crores, was classified as unbilled.
Almost half.
Right. What this means is the revenue's already been recognized because the work has been done, but the invoices haven't actually been sent out yet.
Why not?
Because they bill clients based on hitting specific project milestones. It's actually a really common practice in VFX.
Ah, okay. Milestone billing.
Exactly. They did clarify that about 60% of that unbilled amount had already been invoiced in April and May, shortly after the fiscal year ended.
Right.
The remaining euro 42 crores was billed. Of that, about 28 crores was over 6 months old.
That seems a bit long.
It is. PhantomFX stated their aim is to collect all invoices within 90 days, especially as they feel the industry's cash cycle is improving.
We'll see if they can tighten that up. Now, on the funding side, it seems like they've been relying on borrowed money, some equity raises. They had negative operating cash flow in FY25. And they also talked about that QIP facing a technical hitch. Given these really aggressive expansion plans, it does raise questions about, their ability to fuel all this future growth. What's the capital picture look like?
Yeah, you've hit on a really critical point for any company that's trying to grow this aggressively. Their outstanding loan currently stands at 15 crores.
Okay, not huge, but...
Right. It's mainly working capital debt. They plan to reduce that over the next 2 to 3 years. And importantly, they said they have no plans to raise further debt for expansion in FY26.
Okay, no more debt for now. What about equity, the QIP and warrants?
So the board did approve raising up to 140 crores. That was split between a QIP, a qualified institutional placement for 80 crores, and convertible warrants for 60 crores.
Right. How much did they actually raise?
Well, so far, only 10 crores of the warrants have actually been raised. And the first QIP attempt, a tranche of 16 crores, it actually failed.
Failed. Why?
It was a technical issue, apparently. One single investor sent in over 50% of the funds for that tranche.
Oh,
Yeah. And that violates SEBI norms, the regulations from India's market regulator designed to ensure fair fundraising. So the funds had to be returned.
ouch. That's an awkward hiccup.
Definitely a hiccup. But management clarified that these funds, the QIP and warrants, were earmarked specifically for investments and future expansion, not for working capital.
Okay, so expansion isn't stalled.
They stressed that expansion plans are proceeding as planned, not delayed by this. They also mentioned foreseeing about a 10 to 15 core investment needed for foreign assets, like servers and infrastructure, presumably for China and the U.S.
All right. So despite the QIP issue, they feel their capital strategy is still on track for growth.
That's the message they conveyed, yes.
Now, for maybe the most interesting part, or perhaps a crucial twist, management laid out some incredibly bold projections for the future,
They did.
talking about a 100% increase in overall revenue, even hinting at a 750 crore ambition down the line. That is a massive jump.
It is absolutely an ambitious outlook.
How realistic is that, especially given the challenges last year, the QIP issue we just discussed?
Well, let's break it down. They anticipate about 30% growth over their FY25 performance just for PhantomFX standalone operations.
Okay, 30% standalone, that takes them to...
Around 130 crores in FY26.
All right.
Then, with the imminent consolidation of Tippett Studio,
Right, the acquisition.
which they expect could contribute up to 70 crores.
Okay.
Their combined operations project, that significant 100% increase in overall revenue, potentially taking them close to 200 crores for FY26.
200 crores, that's double FY25.
Exactly. And while they actually call this a conservative estimate,
Conservative, wow.
their longer-term, maybe 2-3-year ambition, post-Tippett and China consolidation fully kicking in, is to exceed 750 crores.
750 crores, that's huge.
It reflects a very, very prospective business outlook. But, achieving that 100% jump this year, especially after the QIP hiccup and last year's difficulties, that will definitely test their execution, their ability to integrate these new pieces seamlessly.
No doubt. And what about profitability targets alongside this ambitious growth? Are they expecting margins to expand as revenue scales up?
They're targeting an EBITDA margin between 38% and 45% for FY26.
So potentially improving margins slightly from the 38% they hit in FY25.
Potentially, yes. Management noted that the pricing environment is, in their words, definitely better than last year. They described last year as very bad.
Okay, so pricing power is returning.
It seems so. They expect to achieve maybe 25–30% profit on select projects. They also highlighted that the major film productions, the big studios, are increasingly preferring established players like PhantomFX.
Why is that?
Because they possess that strong track record, the financial health, the headcount, the infrastructure, and crucially, the security.
Back to the TPN certificate and all that.
Exactly. It indicates that while competition exists, their scale and reputation might be creating a healthier competitive space for them.
Interesting. Looking at their overall strategy then, what really stands out to you about how they're approaching the industry's recovery and plotting this future growth?
What's particularly insightful, I think, is their really aggressive global diversification strategy.
Right. Not putting all eggs in one basket.
Precisely. They stressed not relying completely on just one country or one production hub. They're actively concentrating more on the Middle East, on Australian production houses.
Expanding beyond the usual suspects.
Yeah. In addition to their existing presence in Europe and North America, they clearly believe the industry overall is getting better. Lots of bids, lots of projects coming in. They see a very good year ahead for content creation.
So this multi-pronged approach, geographic and service expansion, that's key for them.
Yeah, it seems key to de-risking their business
Yeah.
and really maximizing that growth potential they see.
Finally, it sounds like investors, maybe understandably given the numbers and projections, had some key questions and requests for more transparency.
They certainly did.
Mhm.
You saw multiple investors asking for more frequent updates,
Like what kind of updates?
ideally monthly or quarterly updates, specifically on order receipts, cash collections, revenue execution, clearly aimed at restoring confidence and tracking progress against those bold targets.
And how did management respond?
They agreed to consider providing more regular updates.
Yeah.
On dividends, which was also asked, they simply said they were working on that.
Non-committal on dividends for now.
Yeah, but the commitment to consider more transparency seems important, especially given the ambitious plans they've laid out. Good investor relations will be crucial.
So wrapping this up, what does this all mean for you, our listener? PhantomFX, it offers a really fascinating glimpse into how a company can not just survive, but actually strategically expand and aim for pretty significant growth in this highly creative but also incredibly demanding visual effects industry. They're navigating some complex financial waters, clearly, while still bringing these iconic stories to life on our screens.
And I think this raises a really important question for the future. As visual storytelling keeps evolving, incorporating new tech like AI, demanding ever higher quality,
Yeah.
how crucial will these specialized digital effects companies like PhantomFX
Oh,
become?
right. Will they be even more essential?
Exactly. How essential will they be in shaping the future of global entertainment? And what does that mean for their long-term value proposition and, frankly, their ability to actually sustain these ambitious growth targets they've set?
It's definitely a space that's ripe for more innovation, more strategic moves.
Absolutely. And PhantomFX is clearly trying to position itself right at the very forefront of all that.